Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lady and Bert, the Dividend Diplomats. Today, we're going to talk to you about three huge missed opportunities in 2024 by not investing in these three stocks when they were beaten down earlier this year. It cost me thousands of dollars in income and appreciation.
Thousands of dollars, guys. Smash that subscribe button. Give us a nice thumbs up for the best dividend champions of the world. Three stocks, three missed opportunities, but you can bet your ass that these two tag team dividend champs aren't going to miss the next one.
That's
Three
absolutely right.
stocks, guys. I can't wait to see if you guys took advantage of this price drop.
That's absolutely right. So why are we here? What is bringing this there? Is this something that's really pissed me off? One of the things that we've talked about is
Like, oh,
we're pumping out videos 5 times a week right now. And with this, we're talking about stocks that are undervalued. We're talking about stocks that pass the metrics of our screener. We're looking for stocks that are beaten down, that are values that you should be buying for your portfolio. The interesting thing is each one of these companies, I know for a fact we featured at least once on our channel in 2024. We identified them. We said these stocks are showing signs of undervaluation. Something is amiss with each one of these companies. There's a reason why they have fallen. There's a reason why they're crushed. We think there's value in each one of these. I did nothing with. I didn't act on them. I put $0 towards them.
easy, Bert.
Yeah, and you know what? Now I'm kicking myself because each one of them have had some form of pop since we identified it and we talked about it.
Oh, it's true. Oh, it's damn true. But man, Bert is self damn determined to not let it happen again. But we at least want to cover the three
Yeah.
stock missed opportunities. Maybe talk about, maybe why we didn't invest or maybe why we
Yeah.
should have invested. But I mean, while the market's still blazing, what are we up right now? 70 S&P 500 over 5,600. Gosh, record high, all-time highs, up almost 20% this year, over 18.8%. Bert, rip the Band-Aid on this first stock because I
Mm.
can't wait for the comments to start rolling in
Oh,
on it.
this one brought out the haters when we brought this company up. This is,
Go broke, go broke.
yeah, go woke. You got the woke crybabies out there. We're talking
Yeah,
about Nike, ticker symbol NKE. And yes, a lot of people have been pounding their chest saying Nike went woke and they went broke and their stock price deservedly had fallen down. The point that we're going to cover here is they hit a low point of $70.55 in August 2024. That was their lowest point after they got beaten down, after guidance was cut, after everything bad happened for Nike. You didn't know, was this company going to turn around?
yeah. Oh,
Like,
you didn't know?
oh, then your ass better call someone. And that's what they did because Nike called out to the diplomats and said, cover us. We want to see, are you an undervalued stock to buy? And you know what Lanny and I said? We'll see. They get to the mid 60s, we'll consider them. We're not interested in the mid 70s. We're not interested in the low 70s. Mid 60s,
It's
call
got
us.
to be below 70.
Yeah, and you know what happened? That never hit that point. Once it hit that low point of $70.55 in August, price shot back up. Now Nike is trading at $84.05. It is up 19% from that lowest point. This pisses
Yep.
me off because we had the read. We had the read that Nike was going through some stuff and that there was potential for a long-term appreciation. And that happened faster than we had anticipated, obviously. Nobody was going to expect a 19% turnaround in less than a month here, but that's what happened. And that's where we are today.
Yeah, guys, when you're looking at one of the biggest companies that are well known around the world, sometimes you don't want to buck that trend. Sometimes it's going to take more than a couple bad quarters to buck the trend. You probably have to have LeBron James, you know, part ways with Nike, same with Michael Jordan, same with every other prolific athlete, leave Nike to pursue
The
other.
diplomats to leave Nike.
Exactly, guys. So, not to say the writing was on the wall that this would have been a great stock to buy at that low point, but it really just depended on your strategy. We didn't buy because we were a little stubborn on the stock price to add another stock to the portfolio.
Mhm.
But looking back, yeah, it would have paid off pretty handsomely just 2.5 weeks later.
Yep. So that was stock number one, Nike. Just do it. And that's maybe probably the moral of this story. Just freaking do it.
But stock number two, Bert, not many in the dividend investor space will look at this stock. But Bert, man, it
Mhm.
was very hard not to nibble and grab and buy because they also, before we even say the name of this company also owns, manages, and operates Venmo.
hmm We're talking PayPal, ticker symbol PYPL, and they are not doing well right now. They're down 32% over 5 years now. They've been down since the fourth quarter last year, where PayPal, it seemed the story for narrative with PayPal is has PayPal lost its edge? And what really caused PayPal to be down for so long too, it wasn't just have they lost their edge. The Fed released their new program, the Fed Now. People have made it easier to do instant transactions. And what made PayPal better than everybody else was through PayPal, the online management. But to your point, Lanny, it was also Venmo. They had mastered, people had made peer-to-peer payments so easy using Venmo. There, when the Fed announced the instant transfers, it kind of changed the game. It allowed Zelle, it allowed banks to find their own way to do it, where you weren't necessarily sure PayPal's niche was going to last because it became so much easier for the JP Morgans, the Cities, and the major players to take them out of the game and do it themselves.
Yeah, yeah, can't argue there. So now I know PayPal also got in and is in, I think, in the crypto space. Correct me
Mhm.
if I'm wrong.
They are.
Buy crypto on PayPal. So they're trying to get a piece of that transaction as well, trying to be a wallet holder for your cryptocurrency, guys. So they have some of your Bitcoin, Ethereum. They even have their own coin called PayPal USD on the app. Which is allegedly a one-to-one backed by highly liquid assets, not exactly cash. But they're pretty available in many crypto wallets, but they're trying to differentiate themselves and they just want to be in your payment space. The big thing that could help them is eBay parted ways with allowing Amex as a way to pay. So you have to almost use PayPal specifically now. So PayPal should see some form of increase in transactions on eBay, at least, which is one of their big partners, former owners. So very interesting on what PayPal is trying to do. They're trying to be just your main payment hub.
Yeah, and that's going to be their challenge. But also, it's PayPal. If someone's going to be able to do it and do it, they have the name to go through with it. Now, we mentioned their lowest point was $56.13. That was back in February. I wasn't looking at them, so I'm not going to pretend like I was staring at them at that point. I had been texting, even tweeting about it, and just talking to you, Lanny, about like it was right around $60. Should I invest? Like, should we put some money into PayPal? Like, is this the one to look at? Nothing happened, obviously, and now PayPal is at $71.70. So they are up 27.74% from that low point in February, and up probably about 20% from when I was seriously considering investing in them. And I didn't. So once again, like Nike, I missed out on some gains.
Yeah, so that's PayPal. Were you guys buying PayPal when they were in the 50s? You have to let us know in the comments because obviously you're up close to 30% already on your PayPal stock holdings. And people will still say that it's still undervalued at this time, but
Mhm.
let us know what you think and if you've been buying PayPal. But Bert, there are three stocks. We've gone through
Mhm.
one night, gone through two PayPal. Bring out the triple threat growth stock opportunity that was possibly missed.
This was the shortest blip of them all, and they don't pay a dividend. Amazon, ticker symbol AMZN, just flash that chart up here. Amazon in April had a little bit of flash crash after earnings. They dropped down. They've been on a tear. They're still up 16% year to date. They started the years in the 150s, jumped all the way up into the 180s, and then they dropped to 161.93 at its lowest point at the beginning of August. And it just was interesting. It's like, it's still Amazon. E-commerce is still going up. And I thought about it. I asked myself, should I be looking here at Amazon? Should I be doing a little bit more? And that answer was no, because I didn't do anything about it. I didn't do squat with Amazon. So at the end of the day, I missed out on it. And in 1 month, they're up 9.33%. Their current price is 177.04. And at that point, when it hit the lowest point at the beginning of August, it was 161.93. Smallest of the gains, but flash gain, right? Like a flash shot right there. It had a chance to scoop up some Amazon.
Yep, just in a couple weeks, bam, wham, thank you, ma'am. Amazon is saying check out right now, instant delivery to your investment portfolio, guys. That's Amazon stock. Again, are you guys still buying Amazon stock below $200 a share? You better let us know in those comments below.
Yeah, so here's the question. You have those three missed thousands of dollars we could have had by investing in them at their lower points. Where are some of the other ones? You'll have to watch our channel to find out. But we'll give you a teaser. Some undervalued ones that I'm thinking about. I've been thinking more, even though they have a higher payout ratio. UPS, ticker symbol UPS, they can't get out of their way right now with these high new labor costs, but it's dragged down the price. The yield's at 5%. Payout ratio is a little higher than I wanted, 80 to 90%. But the question is, do you foresee UPS going anywhere in the next 20 years? And that's a good question to have. And Lanny, you brought this up right before we started filming, and it was one I was thinking about too, is Google. Google's going through some little antitrust problems right now, but it's Google. Much like Amazon, it's Google. Is it worth looking to see if this is the moment to strike with the company?
Let us know if you guys are striking in on Google. No CrowdStrike reference, guys. But let us know as well what other stock opportunities are right here that might be only available at a blip in this moment in time. Let us know below.
That could be your other one, CrowdStrike. Smash that subscribe button if you haven't already. Give this video a thumbs up, and remember, you are either with us or you are against us, Jack.
That was Bert, the Hurt Man Blocker from the DD over and out.